All right, ladies and germs, this is Blake Morrow. You are listening to the Morning Edge, and yes, it is 4:31 a.m. here on a Friday. I'm tired. I'm tired. I'm worn out. I'm really, really worn out. It's been one of those weeks. Glad you all are here, though. TGIF. Today, we have Canadian employment data. I have no Canadian exposure, and I plan on keeping it that way through the Canadian jobs report because, frankly, before I get into the charts of the currency pairs, I want to tell you that if you are long the dollar Canadian, this has to make you feel good. How many of you guys are long the dollar Canadian, by the way? How many of you guys are long the dollar Canadian? Anybody? Long the dollar Canadian? A few of you are. Okay, Eric is, Nick is, Joe, Eddie, Craig, Nigel is, JT is, Stephen is, Sully bailed, Robin, Nick's long the Euro Canadian and New Zealand. You're long the New Zealand Canadian, Nick? Ooh. Um, Craig says hedged with the New Zealand Canadian. Stan is, Zach, Kevin. Okay, and Barnstormer is okay. So there's a few of you. Here's the one thing that I'm going to say should make you feel good. Now, again, I have no position in the dollar Canadian, but notice that crude oil is up against trendline resistance, all right? And as long as crude oil stays capped here, as long as crude oil stays capped, that's good. That means the dollar Canadian could potentially, if crude does turn, like it's actually hitting some resistance right now. Um, if crude turns lower, that's obviously just going to help the dollar Canadian. Now it's Canadian job, it's Canadian employment report, so obviously anything can happen. I think Canadian data will see it deteriorate a little bit here going into the fall, but we also have this AB equals CD move, and this is in crude, so that's suggesting that it's going to pull back at least a little bit. Now, if crude breaks out, though, if crude breaks like above 48 bucks, you got to be really careful. Excuse me. You got to be really careful being on the long side of crude oil. Okay, be very careful. Now, again, I was sitting there looking at the dollar Canadian yesterday, and I was thinking, dude, I need to buy this thing. I was telling all the guys in the chat room, I'm like, I want to buy this thing. It was below 129. It was at 128.70, and I just didn't. I didn't pull the trigger. I pansied out. I was looking at other things, because that report came out, and it dipped. When it dipped right here, I was sitting there looking at it. We went into the 60s. We were right here, and I was like, man, I need to buy this dollar Canadian. And then my focus shifted back over to the Kiwi or whatever the hell I was doing. And anyway, yeah, I didn't buy it. And for those of you that picked it up yesterday on the cheap, good on you, because I think you're in a really great position, especially if you picked it up yesterday. You're in a good position today going into Canadian jobs report. You may not make money. I mean, the jobs report could come in really strong and you get stopped out, or you even maybe lose a little bit of money, but you're given that trade an opportunity, and I think that's awesome for those of you guys that are long. Okay, now with that being said, let's get into our analysis. We're going to go through all the majors as we normally do at this time. If you guys are new to the Morning Edge, welcome. If this is like one of your first times, I've been broadcasting in one way, shape, or form this is my 14th year. Started broadcasting, it was an audio broadcast for the first 3 years. It was just audio. You would go to the Wise Trade website and you would click on we called it a radio show. You'd click on our link, and then I would go through the charts, and people are like, wait, what chart are you on? Wait a second. You're 15 seconds ahead, because it was always an internet delay. So I would be talking, and you wouldn't hear my voice for 15 seconds later. Yeah, that was always interesting. But anyway, yeah, then we went to a TV format, then we went to GoToWebinar. So it's been a long journey. For those of you guys that have been around, you guys have seen and heard my voice for a long time, or seen my charts, heard my voice for a long time. You know, we always do analysis this time in the morning, right at 7:30 a.m. Eastern, and we're going to go through all the majors now. So a couple key things about the euro dollar is the euro dollar hit the 786 retracement, or really rejected from there. Okay, nice little tweezer top at the highs. The euro still looks very vulnerable. I actually think the euro looks like a good short right now. I'm not short the euro dollar at this moment. I'm short the euro pound, but I'm not short the euro dollar. I don't think it's a bad idea to be short either. And the question is, where's it going to go? I mean, you know, where could it go from here? So you got to imagine that this is the high, and I think you can trade against that high. That's the low that we traded following the ECB. Now, what I would be thinking here with the euro is, let's see if it can make one more high. Because if it can make one more high, I'm a seller. Like, I'm thinking, if I can short it right there, then I can manage risk really good for me. You know what? Let me change something. I want to drawing preferences segment. I'll make this red. Okay. So what I'm thinking here is, man, if we can get a rally like that, I'd be probably pretty excited to short the euro up there. I don't know if we're going to get up there, but I think 113 is going to be resistance today. Obviously, we have to write down 113.25, which will be further resistance. Okay. We're ready. Yes, it's 4:39 in the morning here. Now, if that doesn't, now if you don't appreciate that if you don't appreciate me for that, I don't know what you'll appreciate me for. Let's go over to. Well, let's figure out where support is. So this looks like, to me, it looks like trendline support, right? But it's not what I'm going to write down. You know, we could be developing this. We could be developing a complex head and shoulder pattern here with the euro. So this could be a neckline. That's kind of what the pound looks like to me. But regardless, this is support right through here. This is key. This is where anybody who's long the euro dollar from yesterday, maybe, their stops are probably below there. I always try to think, okay, where's everybody's stops at? You know, where did the people that were chasing it yesterday? You know, ECB. I can tell you what analyst was chasing the euro dollar higher yesterday. A bunch of you guys knew exactly who I was talking about. I can tell you where his stops are at. His stops are probably right below here. Because right below there, that's when you panic. That's when, if you're long, you're going, oh crap, I need to get out of this thing. I'm wrong. You know, because it's okay to be wrong, except when you make trades right when the ECB meets. But it's not okay to stay wrong. It's okay to be wrong. It's not okay to stay wrong. Like, I'm wrong all the time. If I'm wrong, I just get out. I take a loss and I'm done. I'm just done and dusted. Get me the hell out. But what's not okay is to stay wrong. You know, you have risk associated with your trade. You're in the trade. You know where your risk is. Maintain that risk. You know, I'll be wrong and I'll stay wrong for a while, but I know it's within my risk parameters. But once I get to my risk parameters, got to get out. Okay. This is probably a case for a lot of traders yesterday. They bought, following the ECB meeting, they're like, oh yeah, the euro's going to 115. And they're probably going to start panicking right around 112 and a quarter. So I think that's where support is, or at least below there. Okay. All right, let's go over to the cable. So the pound, I think has a complex head and shoulder pattern, but then you got Paul Franco. He's like, hey, it's got a head and shoulder pattern. And I think I was looking at it as a complex head and shoulder pattern yesterday, like this. We're here. But it actually looks like a straight up head and shoulder pattern, which then you can argue at this point, that's the neckline. So it's not really a head and shoulder pattern until you break the neckline. It's really more of a setup. But that means resistance, aside from being futile, is at 133.75. By the way, the pound is bearish while we're below 135. If you're new to the morning edge today and you go, what is he talking about? Well, considering the fact we're at multi-decade lows and we're consolidating below a multi-decade trend support, it's bearish. And as long as it will remain bearish. Now, that doesn't mean you can't make money on bounces. That doesn't mean you can't make money on bounces, but I think overall it's still pretty bearish. Notice that we have this, I'm trying to zoom to a, there we go. You know what? They'll look better over here. See this blue trend line? See that? Bap, 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 bap. That tells you right now that if we break below 132, the bottom is going to fall out of this thing, in my opinion. I'm going to sell a little bit of cable here. I sold some at 18, by the way. Just now. 132.80 major support. Okay, stand by for a second. Sorry. Okay, sorry about that. Now, let's go over to the, what were we doing? Oh, the Swissy. Let's take a look at the Swishy. There we go. So, if you recall yesterday, 618 major support. We hit a new low. Relative strength was diverging. I didn't buy it yesterday, but we marked that as support. This is resistance, and you know what? Nothing's changed here. So if you want to see the Swissy squeeze a little bit, 97.60. Support, 96.50. 96.50, 97.60, 96.50, 9650, 97. Whoops, shoot, 0.9760. Did I get that correct? Yes, I did. Okay, we're in range. All right, dollar yen. You know the thing about the dollar yen, this Jack says, Blake, do you see the bigger inverted head and shoulder pattern of the Swissy? No, but not. I mean, yes, but no. Okay, so are you talking about like this, like if this shoulder, that's a head, this is the shoulder? You know, whenever I look at a head and shoulder pattern, Jack, I always look for a. Whenever I look for a head and shoulder pattern, I personally look for an arm. So I look to have an arm. So what I mean by that is, I'll try to draw it for you. When I see a down move, shoulder, head, shoulder, when we're going to breach a neckline and we're going this direction, I want to make sure there's somewhere I can retrace to. So in this case, if we have the shoulder, head, shoulder, if that's the neckline and we break higher, where's the arm over here? So that's the, I'm not saying that you can't, that won't work. I'm just saying that typically I will look for that when I'm trading it as a head and shoulder pattern. Look, I think that if the Swissy eventually breaks this, it is going to be ginormous. Like Donald Trump's hands, huge. It's going to be huge, huge, huge. It'll be huge. If we break through there, it's going higher. Okay. Is it going to be can I trade it as an inverted head and shoulder pattern? I'm not going to target it as one. I'm going to target it as that's a channel breakout, and we're gonna attack those highs and then go a lot higher. So, but yeah, I see what you're talking about. I won't trade it as such. And what? Wow, equity markets are just selling off. Okay, I got to go back to what I was saying earlier. Do you guys notice that the equity markets are selling off? And do you notice that the dollar yen is ripping? You know what that is? That's longer term bullish, the dollar yen. And I'm not long the dollar yen, folks. I'm not long the dollar yen. But man, this stock market is crapping the bed right now, and the dollar yen is. All right, look at the futures right now. Look at the futures. That's the S&P futures. Look at the DAX. Look at the DAX, crap in the bed. Look at the Dow futures. Yeah, Nick, the peso, freaking crazy. I can't believe I missed it. It was one of those. I'm like, man, I need to pick up some peso short, and this thing's gone freaking berserko. Look at that thing. Look at that. Look at that. Since yesterday, I was gonna buy this thing yesterday, and I realized it rallied like it rallied 800 pips or something yesterday. I looked at the peso yesterday, like right here, and you know what I said yesterday? Right here. Do you know what the first thing that came to my mind? I can't chase it. but chasing will never. Look, if you run around and chase prices, you can just I tell you, you can just mark a calendar, just pick a random day, mark a calendar, and then at that date you'll probably be out of the business. So you don't chase prices, but sometimes it does. Obviously it can pay to chase sometimes, but very few of those times. That thing just screamed higher, and it didn't even look back. Unfreaking real. Good pickup, Nick. He said he picked it up yesterday at 1832. That's awesome. Awesome. Okay, sorry. I got back to what we were talking about. So the dollar yen, look at it rally as stocks go down. Now we are at resistance, by the way, right now. We are resistance right now. Bam, bam, wham, bam. Thank you, ma'am. Let's make sure that, I bet you that's a 50% retracement, or close to. Woot, woot. Oh, my friend. Mm-hmm. Uh-huh. We are at resistance right now. Next resistance comes in. I'm going to have to assume we clear that. So next resistance comes in at 113.10. If we break through 113.10, it's going to get it's really. You think it's squeezing now? If we take, oh, did I say 113? 103. 103.10. If it breaks 103.10, yeah, it's going to really start squeezing, because that's the neckline of that head and shoulder pattern. We are in a bearish trend. I'm sorry. We are in a bearish trend. Bearish channel. It's kept us in check all of 2016, this whole year. But when it's going up and the stock market's going down, I wouldn't want to be short. I would not want to be short. I would be a nervous Nelly if I was short the dollar yen right now. Support. Let's borrow that for a minute. Support 102. Let's do one more. Let's do the Canuck. It's 4:53 a.m. on a Friday. I'm so ecstatic right now that I'm here. All right. Okay, now let's think. Let's put our thinking caps on, people. Let's put the thinking caps on. Let's assume we have a bad Canadian jobs report. If we assume we have a bad Canadian jobs report, what's going to happen? We're going to spike up, right? If we spike up, we're going to spike right into this underside of this trend line, which will take us to 618, which is 130 and a quarter. That's key resistance today. On a weak job, if we have a weak Canadian jobs report and you're long the dollar Canadian, that's probably not a bad place to say, okay, I'm done. Take some profits. Like a rip up here, like this. Okay. Now, if we get a strong Canadian jobs report, putting our thinking caps back on, any dip to 128.50 probably be a nice place to be on the long side. All right. Ahead of a key event, we tend to go where, guys? Ahead of a key event, ahead of a key economic data point, we tend to go where? What's the correct answer? Mid-range, right? I would say that's exactly what we just did. The Canadian is back to mid-range. Bottom of the range is right here, 128.50. Top of the range is 130 and a quarter. We are smack dab in the middle. close to anyway. 128.50 is support. 128.50. You guys knew the answer. You knew the answer. You knew the answer. Well, at least a lot of you did. Hey, out of several hundred people, if if a lot of you know the answer, I'm happy. I'm happy. I'm gonna go drink some coffee. I'll be back. Don't go anywhere. All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar, and the Aussie is pushing to new lows. Kiwis at lows. Little heads up. Little heads up. Ahmad asked, Morning Blake, any update on the Wise Trade alerts? No, with that server, they're having I think they're completely rebuilding the server. They had a massive server issue outage we had this week, so our Wise Trade alerts have been down. That's why I just stay in the chat rooms, man. That's the best I can say right now. Thank God the chat rooms are still working. So no, nothing on the alerts. We haven't been able to do updates for a couple of days. So okay, but it's also very early in the morning there, so I'll probably get an update a little bit later today. All right, back to analysis. We have to get boogieing. We got things to do, places to see, people to talk to. Let's take a look at the Kiwi. So the Kiwi, if you missed this yesterday, we posted a nice little tweezer top yesterday, reversal at the 161% extension, possibly false breakout. So now if you look at like your weekly chart, this weekly chart's given us a, here, let's get rid of all this stuff. Okay. If we close below, let's just call it 73.70. That's a weekly candle, right? It's a shooting star. False breakout, right? Not good. Not good. Squeezed a lot of people this week. Got a lot of people that were short out. And when you do that in reverse, that's not a bullish sign at all. At all. All right, so here's your daily tweezer top. Let's see how far that one's going to take us down. So if you go from the low here to the highs, you're approaching your 50% retracement. I'm assuming the 618 is going to offer some really good support today, but and that would be trend line support right through here. So we should get a bounce down there, you know. That is 73.10. 73.10. Resistance. Well, I guess the overnight high will be resistance. 74.10. It's not great resistance, it just is resistance. We were going back into the range. We couldn't hold on to that bullish designation after yesterday's price action. Aussie dollar, massive reversal yesterday, massive. Big, long shadow doji looking thing with a long wick, got everybody caught on the long side above 77. Now, if I was long the Aussie, I would want out on any rally. Like anything, like just give me a rally because I want out. This is the reversal up here. We can make it look like that. I'm just making it look pretty. Okay, so now Hey, move. Back to 76.35. There'll be some sellers. 76.35. We're in a range. Remember, this range is big. No, we're almost back to mid-range so fast. It's crazy. The apex is getting really tight, though, so good news is a breakout's coming soon. Here, let's get rid of that. We don't need that right now. So, yeah, probably in the next month, we should have a pretty big breakout in the Aussie, one direction or the other. All right, so let's figure out why we stopped where we stopped. Let's go back over here. We should have support here at 75.80. All right, let's go over to the dollar index. The dollar index had a really big hammer yesterday. Big hammer off of support, which means that if we break above 95, remember this, and remember the Alamo. If we get above 95.20, we are going to squeeze, and it's going to hurt people. If we get above 95.20, that's going to start hurting. Anybody who's short the dollar is really going to start to feel the pain there. We're in a range. We're at the bottom end of our range. We talked about a lot of risk reward yesterday. Your risk is here, your reward is up here in the dollar index. It's a good risk reward to be on the long side. That's one of the reasons why I've been buying I bought the dollar last night, because I know it's good risk reward to be long the dollar. Now I'm already out, but I'll keep buying the dollar while we're down here. Okay? Unless we break below 94.50, the day that we break below 94.50, gold will probably break above 13.80 and we'll be done. The dollar will be done. But the dollar index is acting like the asset class that will not die. That's key support. I don't think it's support. All right. I don't think it's support for today, though. Support for today will be the overnight lows, 94.80. All right. Peso. Now, Nick, if I was long the peso, I'd probably be looking to exit a little bit up here. Just saying. I'm not. I have no nothing to gain by telling you that. He said I just covered half. Okay. You're approaching trendline resistance up here. 1885 is going to be some resistance. Now, if you guys are thinking I'm going to short it, okay. If the stock market continues to sell off, we're going to break right through 19. If the stock market continues to sell off, we're going to push right through here, and it's going to be wicked, and it is going to squish people. It's going to hurt really bad, because I'll tell you, can I tell you what my top trade of 2017 is? Do you know what my top trade of 2017 is? At some point in 2017 is to short the US dollar Mexican peso. Long peso. I want to do it up at 21. Sorry. $20.50. I am a seller up here, somewhere up there. Sometime next year. I'm going to short the hell out of that thing. Craig says, after they build the wall? Asked. Yes, after they build the wall. After Mexico builds the wall, I'm going to buy the U.S. I'm going to buy the peso. That's going to be, in my opinion, that's going to be like the top trade of next year. Okay, but not this year. Not right now. I think a lot of people think that that's the trade of the year right now, and I think a lot of people are going to find out that they're wrong, and that's where it's going to hurt. That's why I was telling you guys that, because I think if we get above here, it's really going to start to squeeze. Support. Boom, 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 boom. 1865. We're in a range right now. Okay. US dollar, Swedish krona. Or those US dollar, Norwegian krona. Now this, whoa. Uh-oh. That's an inverted head and shoulder pattern, people. Let me remove this. Uh, Hold on. I sold some euro dollar. A little bit. I sold a little here. Rosengren's talking. Current policy increases the chance of overheating. What that actually means is, yeah, we need to start tightening. But who believes him? Down you go. Euro, down you go. I sold it at 69. I'm up 13 pips. Did you guys sell? Did you sell the euro with me? Huh. That was good. That was a good price. Take it. Take 12 pips. Do it. This is a free webinar. Free webinar. Free webinar. 14 pips, take it. You don't know what I'm thinking. You don't know that I'm targeting. You don't know that I'm targeting 99 cents right now. Oh, whoops. Just kidding. Uh, it's 5:17 in the morning. I still just okay. Where am I at? What am I doing? Oh, we were looking at the Norwegian krona. Damn it. We need to be buying this thing. Uh-oh. Oh. That's an inverted head and shoulder pattern. 822. We break above 822 and we have an inverted head and shoulder pattern on our hands. 816. Look at the dollar yen just ripping right now. This is in a range. Oh man, the Kiwi. Oh, Kiwi dollar. I'm out the euro. I closed it out for 14 pips. Why? Because it's Friday. It's Friday. Bonds are moving. Finished off the Swedish krona here in a second. Oh, yields are flying. Woo. I'm staying short the cable, by the way. Woo. Bam, bonds are going to get, they look like they're going to get wrecked here, don't they? Oh, what's the bun doing? Nice buns. You got some nice buns. Oh, shit. Yikes. Yikes-a-rama. We're at the 200-day moving average right now. That's on a continuous contract, so it's not the front month in buns, so you'd have to go look at whatever that is, but oh man, I should have kept the euro. Damn, girl. Okay. Let's go over to the Swedish krona. I gotta finish this thing off. Let's finish off your bias chart. The US dollar Norwegian krona is above, it's breaking out. Crap. Swedish krona. This thing's gonna do the same thing, man. This is a inverted head and shoulder pattern too. Above 8 above 846. $842 support. We're in a range in a very, very, very long-term bullish trend. So just watch that. Wow. New highs peso. Oh my God, peso's right up against resistance. Crude's new lows. Stocks are just crapping the bed, guys. Absolutely getting crushed here. You know what? I'm gonna close my pound for right now. I closed it. I just took whatever 10 pips off the table. Thing's firm. It's holding up pretty good. If it breaks 32.80, I'll get short that neckline. Nick says the loony's gone crazy ahead of the numbers. Yeah, yeah. I mean, it's because crude, is showing some weakness here. So I'm going to tell you guys, the dollar index is getting really close. You have to be careful with long dollars right now. I have no dollar exposure. I already got out of my cable and out of the euro. But look, the dollar index rallied right to resistance. What did we write down as resistance? We wrote down 95.20. We put a star next to it. Do you know why we put a star next to it? It's not because it got an A on the test. It's because it's significant. So we put that little asterisk next to it. So do you see how we just hit? We literally hit 95.20 and backed away. We're at 95.15. We already hit it and reversed. What that suggests to you right now is if we break into new highs from here in the dollar is going to go crazy. Nick says bonds suggest that the dollar is going to go higher. Yeah, if you look at bonds, yields keep ripping. The chances are that the dollar is going to break out, but we know that it's up against resistance. So you have to be careful with your dollar longs. Don't get complacent here because you're right up against resistance. All right, guys, I'll be back for the Canadian data. I got to go get some more coffee. I'll be back in a few minutes. Don't go anywhere. It's going to get fun.